Welcome to this 1-hour sound-only webinar arranged by Insurance Nexus. The webinar is a precursor to a major forthcoming event on the 11th to 12th of June to be held in London called the Connected Insurance Summit for Europe. Our webinar today is entitled Innovation Beyond the Lab, How to Drive Company-Wide Change that Guarantees to Impact the Core Business. And as part of it, we will look specifically at the implementation of innovation at a strategic and tactical level. My name is Tony Boubier, and I will be hosting this call. The format today is that we have 3 eminent speakers who will each discuss the topic for 10 minutes, and we will then open the floor to questions or comments. In terms of my own background, I worked in the insurance sector for nearly 4 decades, the last 10 years in technology, specializing in data and analytics. And in 2016, I released my first book, Analytics for Insurance, The Real Business of Big Data, which is currently being promoted in 90 countries, with a Chinese version being released next month. This is truly a global topic. It affects all insurance professionals, regardless of age and responsibility. Historically, few people have chosen the insurance industry as a career. Most, like myself, have fallen into it. But the tide is turning. Insurance is increasingly becoming a go-to place because of its use of technology and data. Insurance, a 300-year-old industry, remains critical to society as it provides protection to our physical and business assets, and this importance will not change. But the industry is going through a revolution. The connected car, the connected person, and connected buildings are all terms which increasingly feature in our dialogue. The new era of data and analytics are giving us new insights, allowing us to review and improve existing traditional business models. Risk, distribution, operations, claims, underwriting, and our relationship with the customer are all being reinvented. And we even discuss topics such as the insurer of the future. But yet, many organizations struggle to implement these changes. They're challenged with pilot schemes, which never seem to get embedded into the business. They deal with stakeholders who sometimes lack the knowledge and experience to understand the opportunity. There's sometimes an inability not only to understand the real risks, but how to mitigate them. And sometimes a lack of recognition of the essential benefits of transformation and how to measure, report, and achieve them. These are only a few issues which concern us, but it's with these in mind and others that I'm delighted to introduce our first speaker, who is Parul Green. Parul is Group Head of Innovation at AXA UK and Ireland and has an impressive CV. An economist and investor by training, she's held senior roles as strategist in merger and acquisition and in investor roles at AXA, Aviva, Family Office and Citibank. Currently, she's responsible for open ecosystem innovation and strategy across the group's general insurance, health and asset management business. As well as mentoring startups, she's on the judge panel for FinTech 50 Europe, Disrupt 100 and the Insurance Times Technology Excellence Award. Parul, over to you. Thank you.
Thank you very much, Tony, and thank you for that introduction. I sound impressive to myself, although I don't know I recognize myself from all that a wonderful introduction that you have just said, Tony. What I'm going to do is I'm going to break this presentation into 3 parts. Firstly, I will start off by describing AXA's external and internal innovation footprint. Then I will talk about cultural imperatives or impediments to innovation in a large organization. And finally, I will talk about what we are doing in AXA to bring about an Agile Framework. And it's early days, so I'll just describe what we are trying to achieve. So let me start with what is AXA's innovation ecosystem. So when we look at innovation within AXA, we break it down to internally sourced innovation and external innovation. And when I talk about internal innovation, it is basically advancement of core business or the focus areas. This is through product development, business process re-engineering, and many smaller changes to processes which may be old and efficient, which are driven by internal change programs. Then we also run big transformation programs, like recently at AXA UK, we have started a claims transformation program, which is end-to-end change to our claim processes. So, and then thirdly, within our internal innovation ecosystem, we have crowdsourcing of employee ideas. We have a program that we run, which is called Collaboratory. Every year through the Collaboratory process, we received nearly 300 ideas from our employee base of 10,000. And some of these ideas are very ambitious and excellent, but some are just about changing our changing our work life, changing some of our value chain processes to make them more responsive to the customer needs and the way our supplier base and macroeconomics around us are changing. So that's the internal innovation. And then we have, in a semi-open ecosystem model, pillars such as AXA Next, which is a 100 million business model innovation, which scouts startups, looks at changing cultural norms within innovation and within tech and within any allied areas of insurance. And we work to pilot with interesting propositions. And one of these is Fizzy, which was our flight delay on blockchain proposition, which was launched for France last year. So that's the business model innovation part. And Fizzy, we worked with external ecosystem to build out that end-to-end proposition in astonishingly quick turnaround, and that was because it was working on a much lower intensity governance network. Then we have a startup studio called Kamet. Kamet today has 100 entrepreneurs who work within AXA on very interesting enabling propositions. Some of them are like policy advisor for life. Then there is a network orchestrator for garages for motor insurance. And there are some very interesting propositions within medical insurance, such as remote doctors, etc. And then we have our strategic ventures arm, AXA Strategic Ventures, which is a corporate venture capital fund, which invests in early stage and growth startups, all working within insurtech, fintech, and enabling technologies. And finally, we have a much larger part of our business, which deals with strategic partnerships. And some of these strategic partnerships are with very traditional strategic partners like automotive players, but there some are with very new emerging unicorns and tech players such as Uber, where we write in some countries some of the risks for them and also try to understand the business model while we work with companies such as Uber and BlaBlaCar. So that is the whole footprint of what we do in terms of innovation. But being a massive $60 billion market cap group and being present in 64 countries, each of the regions have their own norms to dealing with change and innovation. And this is where culture of innovation plays in. For me, UK and Ireland, which is my geography, there is the sources of, although our culture says that we have shared values of courage, of integrity, all these are strong shared values which should form the culture, but there is essentially a more overriding culture of risk averseness. Now, risk averseness doesn't fit very neatly with openness to innovation. So although we have all these wonderful pillars and also internal innovation, a lot of work is going towards fixes to the existing value chain, and we do need to bring in more of outside in. So a whole lot of collaboration with open ecosystem, which is what I'm leading, and whole of a discussion with people who are more agile and quicker at delivering services to companies and to clients and to parts of the value chain that they are trying to change, because there is a greater deal of focus and more freedom to fail, which is again quite antithetical to a large organization. Fear of failure, risk averseness, and a very heavy-handed governance, which says one size has to fit all, because we cannot even conceive what would be a framework which we would be very happy with to allow innovators within the company or from outside innovators to come and build propositions. So that is the backdrop of culture in most large companies, and especially so in a risk-averse industry like insurance that we work with. And so what we've done at UK and I, and this is one of the efforts that I am leading with, and is build an agile framework with low drag governance. And when I say low drag governance, as in governance which is fit for the experimentation that we are trying to do with partners, and thereafter, if there is a larger risk appetite we discover through the process of experimentation, trialing, validation, iteration, then move on to progressively move on to frameworks which would ally more with a larger supplier or a larger partner that we may have. So that essentially is what we are trying to achieve through this agile framework. So let me wrap up. At AXA, we have, due to our size and reach, we have excellent resources internally, excellent pillars internally. There is a whole lot of work being done, but we are constrained by the way we think always, and there is a lot we can do through working with the external ecosystem on both disruptive and enabling innovation. And to promote both these, we need our culture to be more open to experimentation and iteration, and therefore agile framework that we think is one of the enabling tools to be able to achieve this goal of making a large insurer more nimble and more successful and better prepared for the future. Thank you.
Okay, thank you, Parul. Interesting viewpoint about the balance between innovation and culture within an organization, and the need perhaps sometimes to have an outside-in view of the world. A further reminder to everybody that this is a voice-only presentation, so don't expect slides from the speakers other than the holding slide before you. Our second speaker is Kirsten Gronberg. Kirsten is a senior innovation consultant at the Arm brand based in Copenhagen. Arm is a Danish financial services group which operates within non-life insurance, banking, and life and pension, with high customer retention in a competitive landscape. Their annual report also reflects growth of better claims control and strong risk management. Originally a designer from the School of Architecture, Kirsten started by doing 3D visualization and web design before moving into teaching multimedia and developing new programs and initiatives, including gaming. But she says her heart was more in product development and innovation, and switched to commercial insurance at the Arm brand 2 years ago, working with customer-centric innovation in a business development department. Over to you, Kirsten. Thank you.
Thank you, Tony, and thank you, Parul, for sharing your strategic view on innovation. I'm, of course, on the purely tactical level. I'm based in the business development department of commercial insurance, and I'm basically a sort of one-woman army working with a mixture of design thinking, lean user experience. I will be referring to this as UX probably. Plus business model innovation. So I do everything that has to do with outside in thinking, including running Google 5-day sprints. I do user research and I do a whole lot of workshops. I also help my colleagues create minimum viable products, or MVPs as you can call them. My topic today will be on how to do qualitative research. Tony has written a book about big data, which is certainly something we can do a lot to leverage in insurance. I'm going to talk about thick data, qualitative data. There are a number of challenges with the qualitative research, especially in business to business. It's time consuming, and it's not scalable. You have to spend an hour or two with every customer that you want to interview or test. Plus, it can be really difficult to recruit for the B2B segment. But I'm going to share some of my tips and tricks with you. So your aim in qualitative research is to get as many insights as you can with as little investment as possible. My recommendation will always be to do in-house research, which means that you should have your own team doing it. Doesn't necessarily have to be experts, instead of sourcing it to agencies. One of the reasons is that it's much less expensive to do your research in-house, which means that you can do more studies and thus reach the triangulation, as we call it in user research, which means that you look at your customers from different perspectives. You can't have one test or one research method that will reveal everything to you. So you want to do more studies, and you want to do them at different times of in the project development and with different methods. In this way, you're much more certain to cover your customers' needs. The other benefit from doing it in-house is that learning accumulates in your team. If you outsource research, you accumulate the learning in the agency and not in your company. I would also advise you to keep research lean. Lean research means that you should try to remove all reports and documentation that doesn't bring value to the process. If you have to have the documentation, I mean, we are a heavily regulated industry, as Parul said, we have a lot of governance. We also have the Insurance Distribution Directive coming up from the European Union, which means we should document that we have involved users when we develop new products. You can do a quick analysis after your tests or your research with the whole team participating, and then you can write the report after doing the analysis, have someone from the team write the report. Because in this way, I think you get the best from both worlds, both the lean methodology, which is very light on documentation, and the more traditional approach where you can actually go back and see what led to decisions. I always try to invite stakeholders and managers to observe the tests that I do with customers and also participate in the analysis afterwards, if possible. It creates a lot more empathy for your customers and users if your stakeholders actually watch them struggle with your product, if it's a digital product, or comment on your solutions, share their pains, instead of having it sort of secondhand through a report. I also recommend doing a quick analysis right after you finish a test and have everybody from your team present. You should form your conclusions and actionable insights on the spot so the team can move forward. You can do that in one day after testing. This ties in with the Agile methodology that Peru was talking about. You don't hold the team back, and then you can spend some time afterwards if you want, writing reports and doing documentation. I said initially that qualitative research is time consuming. This means that you should prioritize the features that you want to test. You should identify the high risk features. High risk means for me that these features should be important for many customers or your key customers. You should also test the features that are based on assumptions and not knowledge. If you know that your customers want a certain feature, or you want to continue that feature, it has been in your product for many years, that could, for instance, be fire insurance. This is something you know that your customer needs. So there's no need to test whether that should be part of your product. But maybe you could test how you help your customers after a fire in the best way to create customer value, if you're not certain about it. You should also know how you know that a feature is important for your customer. And this is where you can use the big data and the business intelligence to confirm that you have a lot of customers with this problem, or a lot of customers that fit within this certain profile. I always also start with developing hypotheses. And when I test or interview, I set fail criteria. They're not called success criteria. We call them deliberately fail criteria, because if you do not meet this minimum of customers who can use this feature or want it, then it has failed. So I highly recommend always working with hypotheses and fail criteria, because it makes analysis much easier. It's not a matter of opinion, it's a matter of facts. Have we actually met our criteria? So I'm also going to talk about specific challenges in commercial insurance. One of the big challenges is recruiting customers for tests or for interviews. You can't just go out into the street and meet someone who has an insurance and do guerrilla testing. You need to segment your clients in order to have some valid answers. So I'm going to share some of my hacks with you. If you want to do guerrilla testing, you could go to trade fairs. I went to an agricultural fair and recruited customers for a persona project I had. And I got a lot of customers. About half of the customers I was talking to were happy to participate in a test or even have me visit them. You should also develop relations with your sales force. They have all the good contacts and they can help you in your recruitment. I always ask my customers when it's convenient for them to have tests done. And different types of customers will have different time slots during the day when it's convenient. For instance, a farmer will always have a break between 9 and 10 in the morning, at least a Danish farmer. So that's a really good time for you either to visit them or to do user testing. And I use any kind of contact with customers to ask them whether they would be interested in future testing. So I always try to sort of create a mini customer panel for testing. You can also design your tests and interviews in a way that will help your customers gain knowledge about their own industry or about their own practice. So if there's something in it, if your customer can benefit from this knowledge, they will be much more eager to participate. I've also recruited through mails. I've written to the customer that they have been handpicked, which in fact they have, for testing a service which is relevant for their business. And this is a very good way in to the customers to get them to engage with you. It's also a good idea to do remote testing or go to your customers to test, because that's much easier for them than if they have to come to your place. My last remark will be about a quote that I often hear about involving your customers. Some people have heard a Henry Ford quote that if he had asked people what they wanted, they would just have said faster horses, and he would never have developed a car. First of all, I want to say that there's no evidence that Henry Ford ever said this. And secondly, I would say that it would be bad design thinking practice. You don't ask your customers to develop your product. You ask them about what are the jobs they're trying to achieve, what are the pains and gains they experience in their daily life. Then you interpret this input and you turn it into great business models. Thank you.
Thank you very much, Kirsten. I was delighted to hear you describe yourself as being a one-woman army. What I noticed particularly also was that in addition to your technical skills, it was very clear that part of your function required you to be a very good influencer. And it kind of reminds us that soft skills are important in the issue of implementation. Moving on to our third speaker, but just before that, a reminder for attendees of the call, the opportunity to send questions online. Our third speaker is Beth Cooper. Beth has worked in pioneering change and transformation programs throughout her entire career across finance and professional services. She originally led the self-service work stream for HSBC's branch transformation as part of the first wave of the digital transformation within banking. In her current business consulting role at QBE, she works with senior leaders to embrace shorter-term initiatives such as telematics, as well as wider issues such as the insurer of the future. With Beth's qualifications in strategy and politics, coupled with accountancy and HR, she typifies those who not only have deep technical insurance knowledge, but also are able to see a broader picture. Over to you, Beth.
Hi, Tony, and thanks to everyone who's listening this afternoon. So what I'm going to talk about is the focus on bringing in how you bring your internal stakeholders on board and actually make innovation part of what you're looking to do as an organisation. And picking up on the two previous speakers, talking about the outside in, well, I've just worked within insurance within the last 2 years, so many ways of me coming in and what I'm talking about, I am the outsider, because unlike many of the people within the organisation that I work with, I didn't join as an assistant underwriter and have gone up through that technical route. My passion is for transformation and change and looking how to do things differently. And I particularly liked how Kirsten finished her talk and talking about not asking your customers what you want, what they want, but actually thinking about what are the problems, what are the issues, and then thinking about how you can solve them, because that very much reflects my approach to stakeholder engagement, particularly when it comes to innovation. So starting on thinking about that, it's always talking to people. So when we talk about stakeholder engagement, there are different levels within the organisation. It's not just about getting everyone on at the top engaged at the outset. The more conversations you have, the more you understand the challenges that the business is facing, the more that you can ensure that your approach to innovation is going to address those problems. That also helps ensure that when you start moving into the delivery phase and wanting that engagement, because you've already started the conversation, people are already aware of what you are trying to achieve and bringing them aboard and being part of that journey. So the starting point for any engagement, I would say, is looking at the people within the organisations and the different roles that they will have. This may be to do with what's within their job title, but it's also thinking about the roles within the programme that you're looking to deliver. So you'll have the sponsors and decision makers, so it's important for them that you need to get them to the point that they're committed and advocates. But it's also recognising that this may not be decided as everyone at a certain level. It may be different within those organisations. And by having those conversations, by talking with them, and say, where are your problems? What are the challenges you face today? What is it that's going to make a difference to your business? Where do you want your business to go? And what help do you need to get there? By talking through them, getting them and listening to what they're saying, you're starting to build up a picture to understand how innovation can help them get to where they need to be. You'll notice that where I've talked so far, I've not mentioned the tech. I've not mentioned, blockchain or any of that terminology, because the most important thing is it's grounded in the drivers for the business. Why does an insurance company exist? Well, a listed insurance company, it's about its return to shareholders. What's the main measure of insurance return? Well, then you're talking about your COR. So therefore, the language you're talking with them is understanding what the drivers, what makes their area profitable, where are the operational challenges, and what's going to make the experience better for their customer. And tying those in helps being able to sell that story back to them. So when you're having these conversations, so I've mentioned, of course, listening to what they're saying. So from that, you're getting an idea of where their heads are. And from that, also their heart. Because they may not necessarily be in that same place. So their head may be saying, oh, we know there is this external threat to the insurance industry that's being driven by innovation, disruption, technology, whichever label you want to go. But in their hearts, they may be feeling scared. They may not have experienced something like this before, particularly for those that have spent their careers in, for example, the London markets, where they've joined a syndicate and they've got more and more experience at underwriting. And that's how their career has progressed. It hasn't necessarily, their personal success hasn't necessarily been driven by bringing innovation and change to their own world. So by understanding that, you can help get them to where they need to be. And one element of this, which is quite often forgotten, is looking at behaviour. So going back to my early days in banking, and when checks were still really common, a phrase we used to use a lot was called words and numbers don't match. What that meant was the figures on the check were different from the words that had been written out. And it's a phrase that I use quite often, that within organisations, that people may be saying the right words. They may say they believe in innovation. They may say that they want to be embracing new technology. But when you look at the way that they actually behave, they're not doing anything to move that along. So the starting point is actually having an awareness that that's the case, and then making them comfortable and taking them on the journey. So one way that I found really beneficial on that is when you're having conversations with people who are supportive of the initiative, you can use those as your change agents. Because when you're talking about company-wide change, it doesn't have to be the whole company at the same time. When you've got those whose appetite is less risk adverse than other areas, from which in your conversations you can see that clear business case, and perhaps they've already got ideas of what it is that they want to be doing, by working with them in a structured way, you're able to produce something with clear results of what those outcomes want to be, And most importantly, that as you work through that, it's not just communicating to them and their team so that they can see what's happening. It's getting that story out to a wider audience. So you're starting to create an interest and see what's happening elsewhere. And then rather than doing the convincing, you're having other people doing the convincing to you, because suddenly the innovation becomes much more tangible and real because people can see the benefits, which is obviously why proof of concept is often a very popular route for insurers when they're working with insurtechs and bringing those different ideas in. It's also really important to stop thinking about how you get organisations and senior leaders to think about the tech. It's about what it means and how the difference that it's going to make for them. So, moving on to thinking about some top tips that I would give to you. So, to reiterate, talk to people one-to-one to understand their concerns. That's very often the case for those at the top of an organisation. But equally, you will find every day, and I have conversations every day with people throughout my own organisations and externally, who can see how change can happen, how innovation can be used to make a difference, but they don't necessarily have an outlet. By capturing this feedback, whether it's through internal channels, informally, being the facilitators, you can start bringing this cultural change on that may not necessarily be done in a formal way. And the biggest thing to remember is not everyone thinks that same way, that they've got different appetites. By looking at individually, identifying an individual change strategy and engagement strategy with these different groups, you can find that you get inside and achieve far more than you ever thought was possible. So things to avoid when you're looking at your approaches to engagement. Reasons to do this are not because everyone else is doing it. There can be a tendency in insurance companies, and they're by no means alone in this, that they look to see what the competition are doing rather than thinking what is right for the organisation itself. Because each of these do have their unique cultures, their individual characteristics that will make an approach to innovation different in each one of them, although they may appear to have common characteristics. Using fear to try and convince. So if we don't do this, we won't have a company. Creating fear is not the best way of getting people on board. Again, particularly when you're dealing with people at the top of the organisation who have spent 20, 30, 40 years working in an industry that, as Tony mentioned in his introduction, has been going 300 years. The amount of change that's happened in that time has been very limited compared to elsewhere. So it's about taking them on that journey and relating them to the differences that they have seen and how this is actually no different to that. Don't use terminology. So this is, again, not talking about the tech. Talk about what the business problem that they are facing, to how they want their business to look in the future and how this element is going to make a difference and therefore make it more profitable or make it more efficient, and most importantly, ensure that those returns can be made to the shareholders. Another reason that you see it, investors are asking. Yes, investors are asking, and there was a CB Insights survey done recently that talked about how the buzzwords had been data, now that's shifted into artificial intelligence. So now people are talking about this, but what's the context in which people are having those conversations? Again, it's a challenge. Why are they talking about this? Why is it relevant for the individual you're talking to, and why is it relevant for the organisation in which you're working with? And I'd say, most importantly, when you want to get people on board in times and change, don't dismiss their experience. I was at a conference the other week, and there was someone who was young and new into the insurance industry, and they were talking about how I can see how technology can really benefit how we do this particular process. But my senior manager doesn't get it, and he's just so behind the times. And I listened to that and I thought, he's probably think this young upstart who hasn't been in the industry for more than a few months is telling me how I should do my job. Now, clearly the answer for success there is both of them understanding where they are coming from and learning how to use, mention the soft skill, being able to influence, and I would say most importantly, empathize with who you're talking to, why you feel that way, and how you are going to make a difference to them that is going to make their life easier than it is now. Thank you.
Thank you very much, Beth. We've had some interesting questions from the floor already. What's noticeable to me about our three speakers is that they all originated from outside the insurance industry and moved into it. So that kind of aligns to our first question. Do insurers have sufficient skills to innovate internally, or does the industry have to rely on third parties and an outside-in approach? And is this related in some way to skill shortages? Carol, can I invite you to answer that question? What is the issue around skill shortage in the sector, and how can this be resolved?
So if I look at this question saying, can insurance industry rely on its own resources as it stands today to do innovation? I would say no industry today, as we sit in the fourth industrial revolution, can rely just on itself to do innovation, because the pace of change of not just technology, but the way people behave, digital first, digital natives, the way they interact with companies, and the greater dominance of purposefulness as we go through generations. All these things mean that there is a fast-moving paradigm shift in the world of work. And when a single industry relying on its history, and as they have done before, still stick to the same paradigms, they are out of sync, and they do tend to go, in my opinion, the Kodak way, because the current money makers will keep saying this will not catch on. They will be skeptical of the new technology, try to undermine people doing new things. And this is not new in any industry. This is exactly the inertia that a lot of industries face. Therefore, it is very, very important, in my opinion, to look outside, to have meta thinking. Don't just think of immediate problem. Think, as Beth says, and as Kirsten also says, the problem that you're solving for the customer. Your relevance or of any industry depends on the problems that you're trying to solve. And is there a skill shortage in how the customers expect their problems today to be solved? Yes, of course, there is a skill shortage. We do need to retool people to understand the way that the whole of the ecosystem outside the industry is changing. And for that, outside in is a very, very enabling and accretive approach to innovation.
Thank you, Pearl. If I could pass that question on to Kirsten, and also ask whether the Danish market or the mainland Europe market also have issues in terms of particular skills, and if the way that insurers in, for example, Denmark and Germany innovate appears to be different to the UK.
Thanks, Tony. First of all, I have to say that I have very little knowledge of what is going on in UK and Germany, but I can talk about Denmark. I think that the Scandinavian countries are known to have how can you say, it's a flatter hierarchy in a way than in many other countries. So maybe that makes it a bit easier for us to innovate. What I have experienced in my own department, I'm working with domain experts, insurance domain experts who have celebrated their 40th anniversary. And they're actually very excited to work this way and they want to have more people like me on board, because that's where we really see great things happening, is that when an innovation expert and a domain expert work together to develop new products.
Okay, thank you, Kirsten. Beth, if I could ask you to extend on that, and also particularly to comment on the fact that you entered the insurance industry really as a banking expert. How problematic was it for you, if at all, to understand really the key drivers of insurance, or did you take to it naturally?
That's a big question. I think actually my biggest challenge was to show how innovation was useful to my colleagues. They were very friendly to me. I'm sitting with the business developers as one of them. So they were treating me very politely, but also just going about their daily business. So what I did to get them on board was to involve them in projects and work, not use so many fancy words, but do something instead of just talking about what should be done. And this has really changed their mindset from being a little bit afraid and averse of this to asking for it in every project that we are doing.
Okay, thank you. We have another question from the floor about the process of innovation generally. One imagines that organizations still have to go through the formality of preparing a business plan and their firm proposal. But often there are difficulties in calculating a return on investment, particularly around innovation. Parul, can I ask you, do you still approach the problem quite formally at AXA, or do you tend to be a little more informal in considering innovation, particularly from your staff members?
So what we look for is, one, is the particular innovation strategically aligned to our long-term ambition, which is Ambition AXA 2020, which we have. So, for example, we do a whole lot of innovation in health insurance adjacencies. So we will look at how the data that you collect from your Apple Watches could be used to give you a nudge towards healthier living. So when you tend to build out such conceptual cases, there is no immediate financial business case that can be built out of it. So a strategic fit becomes and the relevance to the long-term vision of the company to move from peer to partner becomes a more relevant metric. Having said that, we do treat this as experimentation, and once we have successful experimentation, say in adoption of right kind of information that customers really value, then we can assign it as more of a stickiness tool. So the PMI customer who would not have normally paid for such a service, but would treat PMI as a commodity, will stay with you. So there is a retention power in these adjacencies, which in health insurance market in UK, which is shrinking, and AXA PPP is growing, these additional adjacencies are truly valued. So in terms of innovation, we don't look at financial metrics, and I'm an investor by training and have a mathematical background. You can put numbers to benefit case of retention as well, but it is a futile exercise because you're building numbers out of thin air. So strategically, if it is aligned to AXA's long-term strategy and we believe there is a retention benefit, we don't need to put it in numbers for experimental phases. Further on, we have to demonstrate whether the benefit we said for retention is shown in the GWP or the APE for that year being stable, and customer feedback saying that they actually did think this metric was useful for them in engaging with their health insurer.
Okay, thank you, Parul. It seems to me that almost the whole issue of innovation is almost one of emotion rather than clear financial benefit. And I'm curious as to how you get some of these changes through the Office of Finance for approval for investment. If I could pass that same question on then to Kirsten, do you think that innovation needs to be calculated in terms of an ROI, or is it really an emotional, customer-centric view of the world?
I think it's neither, actually. I think innovation should have its own KPIs. And what we really need, and what I'm developing or will be developing very soon at Alm Brand, is an innovation strategy. Parul was talking about their strategy. I think that we need to make small bets on many ideas, and then always have these fail criteria that I was talking about. When is an experiment failed? When do we need to pivot, or should we close it down? And then if we see success, we should invest a little bit more until we have a proof of concept. So I think it's a different kind of ROI or KPIs or whatever you would call it.
Beth, if I could pass that question on to you. I mean, Jerry Maguire famously said, "Show me the money." Do you have to show the money to the executives who are your key stakeholders, or is it really, again, a matter of belief in terms of the benefit? Beth?
I would say it's definitely not about the showing the money. I actually think I find it interesting that the barriers to pass for things that are labelled as innovation is often higher than it is for other initiatives within an organisation. And what I mean by that is, we've heard today it talked about lots of fear of failure or quick to fail, and talked a lot about innovation, but we don't talk about other initiatives about them failing. But actually, when you reflect, did they achieve what it was that they set out to do? And often millions of pounds have been wasted on initiatives that have taken many years and just haven't realised the return that was talked about within the business case. So I think there is actually there is the internal challenge of, are the same rules for investment, or however you want to describe it, used in the same way when you look at all initiatives that sit within the business? Is the why always at the heart of making those decisions around that? And which again does come down to the emotional element around that, and being able to make your case so that people are convinced. Because whether you're talking about numbers looking into the future or customer experience looking into the future, until it starts becoming real, you can't control what it is that's ahead of you. And this is why you monitor, you set out clearly at the outset what it is that you're trying to achieve, and you keep referring back to that and thinking about appropriate measures of success that go beyond financial measurement. I just also would like to touch on the discussion around the innovation internally and talking about those skills to innovate. And I would say that actually the skill shortage in some ways is a bit of a misnomer, because if it is truly innovative, then it hasn't been done before. There is a tendency, I find, to underestimate the internal capability that's already there. And by that I mean, it's not about what's in people's job title. It's not about people's age. It's actually about their mindset. Those who are choosing in their free time to go out and talk to innovators who are coding just like they always did when they were growing up, and now they're creating apps, and they're doing this all personally because within the workplace it doesn't give them the outlet. Looking at who it is that's running the startups, and many of them are people who have got frustrated of being part of a large organisation, can see a way that they can do it better than it's being done, but can't find an outlet to that. And in many ways, I find the insurtech industry and others like it are pockets of wasted talent where the larger organisations haven't been able to fulfil the contribution that these individuals wish to make. And that's why I just see innovation as being a huge opportunity for people to start talking to each other, more in depth about how they can make their organisations, what it is they do, better than it was before.
What a fascinating way to wrap up. Thank you very, very much, Beth. The hours pass really quickly, and we've covered a lot of ground, from emotion to tactics to strategy to skills. There's so much more we can discuss about this topic, but I have to draw this session to a close. Thank you to our three speakers, Parul Green, Kirsten Gronberg, and Beth Cooper, and to all those who've joined us today, and especially to those who've sent questions. A final reminder of the Connected Insurance Summit on the 11th and 12th of June, happening in London. And with that, thank you again, and I'd like to draw this event to a close. Goodbye.